So here we are making this YouTube video because I posted over on my IG and over on my TikTok a few weeks back a video about having different bank accounts or opening up separate bank accounts when you either set up your LLC or when you have a business that you're either getting off the ground or that you are already successfully running. And well, even though that video came with a lot of views, a lot of shares, and a lot of obviously people thanking me saying, hey, I've never seen this type of information before, it also came with quite a bit of confusion of how you would actually be able to pull this off and why this works and why you should maybe at least consider doing this if you haven't done so already. Now, one thing that I do want to preface before getting into these 5 accounts that you want to open, again, whether you're starting a business, whether you're thinking about starting a business, whether you're on your 5th hire or whether you've been maybe operating for 5, 10, 15 years already and you haven't done something like this already, is this. Everyone is at a different stage. Everyone is at a different place in their business, in their side hustle, or in their career. I say that to say this. This that I'm about to give you is more of a framework of what I've done personally and again, other entrepreneurs that I've worked with in the past and kind of just had the time to work with them. Not only that, you can also use this framework for something that you are maybe working on or maybe something that you have planned or something that maybe you're planning to develop. This isn't an end all. These aren't the only 5 accounts that you need to have. But again, this is a framework that's helped me with my finances because we know that it's not just about how much merchandise you sell. It's not just about how many subscriptions you have on your website. It's not just about how many consultations you have or maybe how many clients you help. You do have to keep those finances in check. If not, it's the most important thing that can cause you to go out of business, especially if the IRS decides to knock on your door and decides to audit you, because you'll soon find out here that one of these accounts is going to help you in the event that you do get audited by the IRS. So I want to get that out the way because I do know that some people are maybe going to have some comments regarding, okay, well, do I need these accounts? Can I set it up however I want? The answer to that is yes. At least listen to these 5 and then kind of brainstorm from there. But again, this is a shell, the framework of what you can go off of. Really simple overview. First things first. When it comes, actually, before getting into the first one, if you found any type of value in this content, consider subscribing. If you haven't done so already, I think my analytics are right around 76% of the people that watch my videos aren't subscribed. I'm glad the videos are reaching a new audience, and I'm also questioning why haven't you subscribed just yet. So if you find value in this content, consider subscribing. And if you find value in this content, then consider hitting that like button down below as well, because it does help this information get in front of more people. Okay, with the first account, let's get right into it. So what you're going to do is you can go to either bank that you have right now. It can be your local union. It can be your local big bank. It can be a local bank that maybe is specific to your state, specific to your region. And then you want to let them know that you want to open up these 5 accounts. Now, with these 5 accounts, you want to make sure that it's different from your personal accounts because there's something known as commingling. Whenever you're commingling your finances with your personal as well as your business, and this goes even for you, even if you're driving for Uber or if you're receiving a 1099, let's say you're selling real estate and then you still have a day job, or if maybe you're selling on Etsy and maybe you're selling on Etsy and maybe have your own personal income from something else that you do, or maybe a physical labor or job that you have, then what's going to happen is if the IRS decides to audit you, it's going to be flagged as commingling accounts. You want to make sure that these are totally separate from your personal checking. Now, going into the first account, you are going to want to open up what's known as the revenue account. Think of the revenue account as the big umbrella of where all the money is going to flow into, or really the big bucket that all the money is going to flow into. And then from here, it's going to distribute into these other accounts. So with the revenue account, this is what you're going to link. Let's say if you are selling on Etsy and you're flipping things online, or let's say that again, you're selling homes, or maybe you're a full-time hairstylist, whatever that career looks like for you, all that money is going to go into that account. So these are all the sales. These are all the consultations. These are all the products that you've sold. These are all maybe every time that you've ever maybe traded your time for money, or maybe anything that you've gone out of your way for to get paid for your service or for your business, it's going to go here. I'm creating different examples so that you can see all of the revenue for that LLC or all of the revenue for that business is going to go into the big bucket of the revenue account. The second account that you want to open up, and by the way, this isn't in any specific order, but the revenue account is the main one that you want to have. But the other ones that I'm about to mention here, it isn't in any specific order of importance. It's just the way that I wrote this out and the sequence that I ran for myself personally is going to be your tax account. Now, the reason why I wanted to personally open up my tax account before opening up any other account apart from my revenue account is because I didn't want to have the headache of having to write that check. And obviously, you know the growing pains as an entrepreneur. You now have to write checks to the IRS when tax season comes around. You may not necessarily see a refund, or at least as big of a refund as you once did, but that's okay because it comes whenever you're growing a business, right? So with you writing checks and with you having to pay obviously your taxes back to the big guys, back to the IRS, you want to make sure that you're doing it the right way. And so one of the ways that you can do that is by having your tax your tax bank account set up. What does that look like? Let's say every time or every month, at the end of the month, when you're looking at how much overall income you had, of how much you came in, before you even take profits, before that money gets distributed anywhere else for any payments that you need to make, you want to make sure that you set money aside for taxes. I'd rather see myself cut expenses somewhere else than be behind on my taxes, because I can figure everything else out, especially when you have business credit, especially if you have partners, especially if maybe you can kind of hold off on something not being as important. When it comes to taxes, especially if you're getting audited, or especially if you run the risk of not paying them on time, the last thing that you want to do is have a microscope on you and on your business, which is why you want to set up that tax account. Now, this is going to vary depending on where you live in the country, right? If you live in California, obviously it's going to be a completely different scenario. If you live in Montana, if you live in Montana, it's going to be a completely different scenario. If you live here in Florida, we have state taxes, we have income taxes, we have federal taxes, and then all the different types of taxes and fees in between. So I say that to say this. A good rule of thumb is anywhere between a 15 to a 30% that you are going to save on your taxes. Now, the reason why I'm going to make that wide margin is because this is the part of the video where you want to obviously speak with your CPA, with your tax professional who's going to advise you. Remember, this is educational purposes only. So I don't want you to come back and say, hey, Irv, I got sued after watching your video. No. This is educational purposes only, and that's why I want to go ahead and put that little caveat in there. So the third account that you're going to open is now going to be your operational account. Think of your operational account as the account that you use to keep your business afloat. This isn't to expand your business. This is every single payment that I have that needs to go out. This is what it takes to keep my business alive. So an example, if let's say the studio right now for my YouTube setup, if I'm paying, let's say, rent here to rent out the studio, that's going to be the operational expense. The utilities to keep this studio running, that's going to be my operational expense. If maybe I have staff, that's going to be part of my operational expense. So maybe if I have an editor that I send this video out to every week to check out, maybe to color grade, to edit, whatever that looks like, that's going to be. Maybe if you're driving for Uber, again, and you have your own LLC. Let's say Irv Drives LLC. But I drive for Uber because I'm still getting a 1099 miscellaneous. You're still considered a small business owner. You're still considered self-employed at that point, right? If you receive a 1099 miscellaneous, what does it take to keep my car running? What's the gas? What's the oil? What's the lease on that? What are the tags? All of those are considered operational expenses. Once I figure out what that is, every month, you should, for the most part, see it kind of flowing the same. Obviously, as you start to grow your business, some of those operational expenses come up. But so the revenue, you want to make sure that you at least keep that operational expense at a bare minimum of what is the bare minimum that it takes for me to keep this business up and going. And then obviously, as you become more strategic with your business, you can start to figure out, I can cut here, I can cut here, I need this, I don't need that. And that's how you start becoming more profitable in your business. And speaking about being profitable, let's go ahead and go into account number 4, and that is going to be your profit account. Now you're probably wondering, Irv, why did you leave the profit account? Because I saw somebody comment over on, I think it was either TikTok or Instagram, that they set up their profit account first after revenue. And that's okay. You can set that up. Remember, this is depending of how you want to set your business up. But for myself first, I wanted to make sure that my profit, everything that I had, building my business, I was actually profitable. You'll notice that when you're starting your business, you're not necessarily profitable, at least early on. Now, you do obviously want to have a structure, and depending on if you have an S Corp, depending if you have an LLC, depending if you have employees, partners, you obviously want to make sure that these people get paid. But there's sometimes, especially if you watch Shark Tank, they ask them, have you taken a salary yet? And oftentimes it's not so much that they're not profitable, but they're kind of just throwing that money back into the business, or they just haven't found a way to pay themselves first. So if you wanted to take this time and figure out, okay, I want to pay myself first before I pay everyone else, you can go ahead and do that. But again, for the purpose of this example, I'll go ahead and leave it fourth, just because I want to make sure that my business is still running. And I want to make sure, because I know that it's going to be able to feed me and my family on the back end. And then I also want to make sure that things like taxes are paid as well as, and obviously the operational, which we just finished covering. And then last but not least, we have your reinvesting. And I'm going to go ahead and put a little backslash on there for savings or some type of emergency fund, right? The reason why I wanted to go ahead and you can, kind of swing this either way is because you're going to fall in one of two categories. You're either going to fall into the category of you want to be able to save for a rainy day in the event that maybe you have a few employees walk out and now you need maybe to hire staff, but now you need to bring on somebody with maybe a bit more payroll. You can go ahead and use that from the savings that you have. Or maybe there's some merchandise that maybe you didn't account for, and then now maybe you guys sold out, which is a good problem to have. And now you need to bring on more merchandise. It's going to be different from the operational. So now with your savings, you can say, you know what, we were maybe short 100 shirts for this launch. So let's go ahead and order 100 shirts. We have it. We can go ahead and pull that out from the savings, not touching the operational. That's the first group of us. The second group of us is maybe you start to think to yourself, okay, I don't necessarily need as much of a floor as much as I need to reinvest back into my business. What does that look like? That looks like self-education. That looks like maybe hiring someone that can maybe fill your position. That's called the reinvesting, because now you can leverage yourself out, get some of that time back, and go out and take on either the next launch for your business, or maybe take on that next territory that you're looking to break into, or maybe break into that next space. Possibly if you are looking to reinvest into your business, one of the ways that looks is that you are going to go out and maybe replace and duplicate the system that you have right now. Maybe that means that if maybe you're running it on a certain platform to maybe accept some of those payments, you're now going to maybe scale up into another platform that's maybe going to be quicker, maybe less fees, possibly has more integrations in there. Whatever that looks like for you, that's known as reinvesting. Think of it like this. Anything that you put your money into from the reinvestment column or from the reinvestment bank account is supposed to get you a bigger return from when you first put it in there. If it's not doing that, then it's not a reinvestment account. Think of it more of an operational account, which is just to keep the business floating at a bare minimum. So there you have it. Those are my 5 accounts of what I would open right now if I was either starting as an LLC or if I just launched my business off the ground. Now, if you wanted to, you can go ahead and put some of this on different platforms that are out there, kind of like your QuickBooks, or again, you can speak with your CPA about setting this up. I know that for some people, they don't necessarily feel as, what I can say, confident just running it off of a QuickBooks, just because they actually like having their money separated from one account because they feel a little bit more control over it, rather than that money just being there and then them having the discipline of possibly having to not touch that money and then saying, okay, it's going to pay this or it's going to pay that. So one of the ways that they conquer that is they have these separate accounts. So the dollar amount that I do have left in my, let's say, profit account is what I can use for myself without feeling guilty if I go out and I spend it all. So there you have it. Those are the 5 accounts to take a look at and consider. If you found value in this content, consider subscribing and hitting that like button down below. Don't forget that anytime we're not posting on here, we are posting over on the Inside with Irv show, which is our podcast style channel. So if you like what we have going on over here, you'll love what we have going on over there. Once again, I appreciate you guys checking us out. Until next time, everyone, I will see you in the next video.